Hi everybody and welcome to another day with Serene Education. Just going to be looking at the four majors this morning, starting with the euro against US dollar. Let's have a look at that daily time frame, see what happened yesterday. Indecisive candle, a pullback at the 50-period moving average, and I take it what we're going to probably see now is the breakout and the pullback to subsequently occur. With any breakout, you can see quite clearly any breakout, there's always going to be a pullback and then a continuation. It'll be none the same with the breakout we've seen recently to the upside, and we likely to see a pullback. So pullback in play at the moment now. Indecisive candle yesterday, more of a little shooting star type thing, more emphasis at the bottom end of that 50% of that candle, and very indecisive. A lot of momentum. Don't get me wrong, a lot of speculation, but not real driving momentum. So indecisive and subsequently a consolidation. What we'd like to see is to see that price support, intraday support, or sorry, resistance being broken, and we'll definitely look to the top side. At the moment now, we still have two parts to our four-part strategy template in our favor. In the case of the blue arrow and blue candle, sentiment still looking negative, and I feel the longer we spend above the 1300 mark here, then we should see the sentiment on either side, these histograms going blue very shortly. So as it stands at the moment now, if you wanted to see where price is likely to go to, we can always take a fib retracement from our current high in February to the current lows down here, and you could clearly see, let me just bring those up in a different color so they can really stand out. You can see the 23.6 has been broken, which is at the 300 mark, 1300, sorry. 38.2 is the where price is tested right now, so we have to get above 38.2 in order to see the 50% retracement being the next target. But in the way we have the 50-period moving average, sorry, the 50-period moving average, that's correct, and we need to get above that in order to see any further progression. You can see quite clearly two fib ratios now coming into contact with each other, so there's a bit of resistance here, and you can quite clearly see in the past we had a bit of consolidation through here. So got to get above this very strong resistance level in order to see any further sentiment to the upside. So as it stands at the moment, our intraday on our 4-hour, you can quite clearly see price has pulled back from those highs recently. So what we can do, as I said, is take the intraday high, which is way up here in February, to the current low where we had just recently here through April, and you can quite clearly see now we're seeing a pullback. And nice, you'll notice that the institutional moving average acted as pretty much resistance for this pair to the downside. However, you can quite clearly see recently that intermediate downtrend, or that major downtrend on our intraday charts, has been broken. So the sentiment is looking positive now near term, and that's really good sign because it's broken not only the institutional moving average, but it's also broken a major support and resistance level. We attempted this level here not too long ago, and price failed miserably to actually hang on to those areas. However, near term you can see the breakout, the pullback, and then the continuation higher. But it's continued higher now, not into the 23.6 fib retracement, but the 38.2. And as it headed into 38.2, we saw this exhaustion candle here in terms of the bearish engulfing candle at the 38, and sure enough, we've seen selling. But as long as it maintains above 1300, there's always the likelihood for further sentiment to the upside. You can see on our 4-hour time frame, still looking positive. There's more blue than red on our intraday chart, so it's telling us we're seeing momentum to the upside, and we're getting higher swings, which dictates upside. However, near term, you can quite clearly see this is the important one. You could always take the low here now, intraday low to the current high. As long as price, this is what I use for February trade. So intraday, as long as price stays above the 1303, this consolidation here, then there's more likely you're just looking for the bounce. So you could buy on the pullbacks, very aggressive, because you remember, as long as it stays above 1300, there's always going to be a likelihood for price to continue higher. So what we've seen now is recently a breakout. We are seeing a pullback. Just wait for the pullback to confirm a support now above 1300, nice bullish engulfing candle, something like that. That one over there is a bit worrying. It's a bullish, but it's a bit worrying, and pulled back just a bit more. I'd like to see more of a confirmation signal, something like that, a nice full bull candle above here. And then we could target back up towards the current highs at 1312, get above 1312. Then we are in pretty much free air. We're going into an area of consolidation, but we'll start looking above that 50-period moving average on the daily, which will then start looking for price to head up towards that all-important 50% retracement area from our current February, our January highs to our April lows. You can see the 50% line here, roughly around the 13,2500 mark, which will bring us back to price support and resistance levels here, resistance and the support through the better part of January of this year. So got to be patient. Plot those lines on your intraday charts. Wait for price to consolidate. Now you can see resistance, support. So this area here, 1303, could be the intraday support that we're looking for. As long as price maintains above that, always look to see if we can actually buy into the upside. On our hourly chart, let's have a look and see. Sentiment's still looking negative at the moment now. You can quite clearly see that price. The RSI, I've plotted RSI. You can see they're still getting lower. Even after price reattempted the current high, you can see quite clearly there. Good example. Swing high, swing high, swing high, swing high. Oh, swing low, swing low, swing low on the RSI. So telling us we're seeing consolidation as we've moved higher, and that's what we're seeing now. Price is pulling back here quite clearly. But as long as I said to you, as long as it stays above that 1305 mark, then, which is prior resistance, breakout, support, then there's always going to be an opportunity for price to move to the upside. Okay, so intraday now, at the moment now, you can see that the hourly is testing yesterday's high. Very indecisive high yesterday, very small trading range, very indecisive range. We know that because the candle showed us. So if we get above that, then there's always going to be an opportunity for price to move back up towards this 1310 mark, the current resistance level intraday. RSI, we'd like it to be trading above the prior one. So you can see quite clearly now, RSI is testing the prior one and it's moving, and it's pretty much on the same level. So things are looking good at the moment now, but we'd like to see that break higher to confirm that sentiment's still looking higher. Personally, I'd like to see a break of 1310 to get that sentiment on my side. I'm not going to be speculating. I don't want to join the speculation group. You can see quite clearly now that we have red, but it's blue on the other side. I'd like to see that sentiment coming from the market, and then I'll make my choice. On to sterling. Let's have a look at the daily. Very indecisive. Very, very indecisive. Prices really try to make an attempt to maintain the bullish upside. Since March, I mean, we saw it bottoming out here at 1485, which was our long-term support and resistance level after the break of that 15300 mark. We saw this indecision candles here, and then almost a morning star formation. You took all these together, we won doji, and you took all this and that. It's a nice morning star, and price moved higher. However, on the way to the upside, finding a bit of resistance between 1505 and 1520, but still, each time we went into the underside of the 15300, it never really fell away. So we saw the breakout, the pullback, and then we never saw the continuation lower, as price always fought to maintain or to reattempt the 15300, which is telling us there's more positive sentiments in this particular pair. And sure enough, we did get that breakout. However, it didn't really go with it. You can see it's been very, very skittish. It's not really movement with a lot of momentum. And yesterday on sterling, you could see quite clearly that we saw a reattempt just recently, and yesterday's candle very indecisive. Now we're above 15300. Now they're looking for the momentum. But as long as it maintains above the 15300, let's look to see if we get the momentum sometime this morning. So what we would like to see ideally is a bullish engulfing candle. So the intraday, we want to see that buying sentiment. You could see quite clearly. I look at the gauge where the institution is below price positive. My histograms on our side pretty much blue, so telling me they should be looking for buying sentiment. But you can actually see now, as price broke above the 15300 mark, price reverted to the downside and then reattempted. But a lot of indecision this time around after the breakout. Very indecisive, no true buying sentiment coming through, which is a very which is a negative signal. We'd like to see, if price is attempting these major support and resistance levels, where the hell is that sentiment? Come on. You're making all this effort to get here in the first place. Why aren't you driving through? Not a really good signal, because that all this ends up being is fake outs. We don't like fake outs because they tend to get people burnt. We like to see a genuine move from the market, and hence the reason why I don't mind giving away big candles to the market, because then they tell me they're genuine sentiment. So at the moment now, this 1535 has been a major sticking point, a major resistance for this particular pair for a number of weeks. And so we need to see price getting above it. So clearly, look for a trigger alert above 15,3500 this morning. If we get it, then happy days. Then start looking to buy to the upside, because you can quite clearly see that we are having swing high, swing high, swing high, swing high, swing high in the direction of the upside. If we don't get that, look for a bearish engulfing candle close below 15,300, and then we target back to price support and resistance level lows. So support there, target 1, target 2, back to the institution, break of target 2, target 3, target 4, back down towards these 1505 marks. On to the US dollar Swiss franc. Let's have a look at that daily. This one over here, I mentioned that we saw price getting above, making, as for sterling, making all that effort to get above a recent support and resistance level. Same case here in the shape of the US dollar Swiss franc. Buying a lot into and above the 940, which is the institution moving average on our daily. And as long as it's trading above the institution, then there's always going to be more of a positive sentiment. You can quite clearly see our histograms on the other side show that. Because previously, price was trading below the institution, there was very much more red on the other side, which told us we should be looking for selling. So, back here above the institution, a lot more blue, which told us we should be looking for that sentiment. But not really. Once she got above the 940 here, above the institution, she never really, she pulled back, and then we got this beautiful bullish engulfing candle, pretty much covering this whole consolidated range at the same area. We would have liked it to move higher, and it did. Don't get me wrong, it did, but it didn't go with sentiment. You can see the RSI. What I do when I look at buying sentiment moving up, straight away I plot an RSI just to tell me if it's genuine sentiment to the upside. And as it moved higher, RSI was moving lower. So that told me straight away that there was no real sentiment in this move. So I was very, very apprehensive to go long after we saw all the sentiment over here. And I did say at one stage, listen, we do need to see. I'd like another further confirmation candle close above that 955, and it never came, because as we got to this area here, price really gave away. We had this tweeze at top, and price reverted back to the downside. So intraday there were a lot of shorting opportunities, and we could have targeted the 940 yet again. But when she got a 940, did she bounce? Nope, because that sentiment bar then was never in this upside move, and showing up the US dollar crashed against the Swiss franc, and in doing so, when she broke lower, she targeted a price support and resistance level area at the 930, and that's where she is at the moment now. So she's below the 20. She's in fact below all the moving averages, which is not a good sign. And you can see we have two parts to our four-part template telling us we should be looking for selling. So selling, Chris, heads up, we have a red arrow, red candle. Things are not looking all that great. But if we're trading at a major support and resistance level in the shape of the 930, which is our weekly and monthly Fibonacci retracement, then I want to see it broken. You can see price moving into it and moving away. This candle here, indecision, then more selling, but never breaking lower than that, so moving up. Yesterday's candle, very indecisive. Doji at the same area. So are we seeing consolidation now with a potential for upside? Okay, so it's sold into the support. Are we going to see this bounce now? And a bounce and a correction bounce back up towards the 940. We have to be aware of it, because we've had 1, 2, 3, 4 days now support, or holding support at 930. The only thing is going to really take away from this current support is a bearish engulfing candle. So this is where we have to be patient. We don't want to be selling into a major support, and we don't want to be buying because there's no sentiment. See, look, there's doji. We want to see a candle that's telling us we're buying, and then we buy. Okay, we don't want to be the speculator. We want to be trading positive news. So for me, no trade as yet. I want to see a clear direction, and it's got to be, if this is still to be negative, a break of 930, and then you have my full attention. Failure to break 930, then there's more likely for price to start looking positive, and then I should start looking for positive candles, a daily nice bullish engulfing candle, and then what I'll do is I'll target 940 against market trend as my first target as we head back up, because now it's forged a nice support here at this area here at 930. US dollar, Japanese yen, this particular pair, and any yen crosses have been doing fantastically well. Yen's really been taking a beating, and I've explained why, and the US dollar is none different. If I show you the monthly chart here, you can quite clearly see the progression. I've gone straight to a monthly chart, guys, because you can quite clearly see, it's blatant to see how strong this has been. The all-time high back here in 2007, and you can see price, the US dollar really falling against the yen since 2007. Bottoming out to 2011, 2012, and sure enough, when price actually moved higher, she moved with a lot of momentum recently through August, October, November. And when she did do that, she targeted her first port of call would have been the Fibonacci retracement at 23.6. What did she do? She moved straight into that, consolidated, and then we saw another week of breaking higher and moving up, and we saw a couple of weeks moving towards a 38.2 where she consolidated, and we saw price breaking higher. And since 38, she's been moving with a lot of momentum. Look at that, beautiful candles, very little indecisiveness, guys, and that's what we want. True candles of decision, moves price very aggressively to the upside, and that's what we've got. So if I move this to daily, I've plotted those major monthly, weekly highs. That's exactly it. The 87 here was a 23.6. The 94 was the 38.2, where you can see price procrastinated for a long period of time. When she got there, she really went sideways for almost a full month. In February, pulled back, but the sentiment was still looking positive. So she pulled back only to 23.6 of this retracement here, reattempted, broke higher, the pullback, and then she failed to really move any higher after the pullback, and then she subsequently failed a bit. But at the last minute, we had the Bank of Japan saying, listen, yeah, they want to do quantitative easing, pump a lot of money into the system, bang, 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 and what happened? We had this bullish engulfing candle, which really moved higher. And you can see how, even though it was bullish, it moved into the prior support and resistance level highs on the daily at 96.50. Broke above that, then you have my full attention as we broke into clean air, and price has just made its way all the way up to 100, and you can see it's still taking profit. So up, profit, up, profit, up. So very indecisive as you head into a major support and resistance level high. The monthly high, the yearly high here at 100, which is the 50% retracement from those 2007 highs. So to 4-hour candle, let's have a look and see it. So you can see the major breakout here. There we go, 38 above the institution, above all the moving averages, and off she went. So break, pull back, and you can see the momentum was so strong that the pullback didn't even break 23%. 23.6% of the pullback here. So very, very strong. Broke higher very quickly, enter, and moved higher to the upside. And subsequently now, that's where we're trading at the moment. So what do we do? Okay, so as you can see quite clearly, moving into the 100 mark, people are taking more profit at the table, so they're running into this major resistance level with less risk on the table. That's what you want to be doing, trading with as little risk as possible as you head into a major support and resistance level. I can guarantee anybody who entered long here would have been taking profit as they headed into this 100. They never ever want to be going. You always want to be taking profit as you head up into your target area. Okay, so that's what's been happening. Hence the reason why price has faltered along the way. Very indecisive candles, but nonetheless, she's got there. What we want to see now is the US dollar breaking higher. We have to see a confirmation signal. For me, I was trading this just recently, but I've now closed my position. I would like to see our price doing the rest as we head into this year. I want to see the 99.50 becoming support, and I want to see a close above the 100 going into the new week next week. If we do see that, then it's going to be more opportunities for me to buy along on the US dollar against the Japanese yen. But until such time, then I should be looking for consolidation with a potential for price to pull back now towards these current areas here as people take more profit from their trades. So here at 99, nice round number. We have a lot of consolidation. If price fails here, look to the intraday shorts here to this level here. So ideally, this is still looking long, so you still want to be buying into the upside sentiment. So if anything, you want to see price moving or closing higher than the 100. Okay, so that's it for today, guys. Please look and see if there's any fundamental news out today. Not a hell of a lot for the European. We have the ECB monthly bulletin. That's going to be important. Just be aware of it. But a lot of news for the US market this afternoon. Unemployment claims, very important one. We have the FOMC. There's been a lot of FOMC speakers talking this week. Yet again, imports price month-on-month figures are expecting. It was positive the previous month, but they're forecasting a negative figure. So have a look at that, and then we have another MPC memo talking for sterling at 2 p.m. GMT this afternoon. Otherwise, not much other news. There might be other stuff underlying that might be important, but just look at that fundamental news, take it on board, and apply it to your charts. If you are using these particular templates, i.e. the Serene Education templates, please back it up with sound money management. I can't reiterate that. So important. It's pointless having a fantastic strategy if you cannot build on that with strong money management rules. Okay. Other than that, enjoy it. Keep it simple. Always plot major support and resistance levels. Be aware of your major support and resistance level, highs, lows, etc. That's going to factor into your trading intraday. Very, very important. Otherwise, I'm going to leave you with that. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, you guys trade serenely.